Good morning, friends. Welcome back to the State of the Market live. Today is 22nd July 2022. This is the 35th episode. And today we will analyze Nifty and Bank Nifty futures as we do it daily. First, let's get the market analysis going, and then we'll discuss something different, what to do and what not to do in trading. Well, let's see where SGX Nifty is. SGX Nifty has opened in the same levels as we have traded yesterday. So yesterday the market was in a very tight range. After opening, there was a lot of volatility within a 50 to 60 point range, or rather 100-point range to be wider, to speak wider. So in the morning today, Asia morning, what SGX is doing is large players have set their mark at 16,700. Usually I discuss this on every Friday. Whenever for the week, for the expiry week, that means from Friday to Thursday, if the market has been up, there is a 95% chance on Friday it will be down, unless there are some exogenous factors such as a news that is impacting. Okay, so there is always a 5% chance of the market not continuing this, but usually on Friday, it will certainly be not a continuation. Either it will be a range market here or it will be a small down. Let's not expect a deep fall as well, because now the market is very strong, where we are seeing how the put writers are, fighting. Now, so for this week, we have seen the market up. So today, our base case will be for a position down. So let's see how it goes. In SGX Nifty futures, the market is still strong. We do not see any negativity. So we have not broken even yesterday's open. So there is no chance of any negativity. So, however, we have not crossed the highs, sorry. So we will keep this range, that is 620 or 600 to 700 range, as the go-to area for trade today. Now, let's see what ES is doing. So yesterday night, I was updating. I told you that 39 bounded today's highs, and it even went to 4,000. It tested 4,000. This is called a key option barrier, a psychological barrier, where there'll be a lot of options, call options lying. These are called barrier options, and these barriers need to be broken. So when the barriers are broken, there can be a big move. So let's see how US is going to respond tonight. However, before the US opens, our market might be a tepid, that means a rangy to down. Let's keep that in mind. So in US, yes, we have to cross 4000, that is 4,000 levels. Otherwise, any move below 3973 can bring us back towards 3930. Below this, our markets will also start collapsing from the highs. That's it for ES futures, that is E-mini futures. Now let's see what is happening in our Nifty futures. So let's see how on a longer term, that means on a higher time frame, the market is looking. Hold on for a bit. Trading View is giving me some kind of slowdown here. Let's see how it goes. So let's see. Okay. Okay, so there is some problem with this. Let's see for a bit. I hope this is getting recorded. Sorry, guys. There is a bit of disturbance in. Let me see if we are continuing. Okay, we are on track. So we are live. So sorry about it. Sorry about the mess. There is some problem with the internet. So I got shunted off. So yeah, on a higher time frame, let's see. Let me again confirm whether I am online or not. It seems there is some disconnect here. So I need to get back. Yes, I am. So that's great. So sorry about it. Sorry about the awkward break. So we are here near the resistances. So we see that, kind of we are exactly near the resistances. However, we are making a small W pattern. This is an awkward W pattern. However, this is a W. So this is generally a bullish pattern. So we might kind of see some bullishness about this 36,249 levels. We're discussing bank Nifty here because there was some issue with Nifty. So we'll just finish off bank Nifty and then we will go to Nifty again. So here we see that bank Nifty is very bullish. So we have to keep in mind during the trades. Until here it was fine. Until here you could have played the ranges because we are at the lows. So, however, above this level, we need to be very careful about bullishness. So you should not keep on shorting the market. And also there is a fair chance that we can make headway into higher levels if these levels are broken. If the market wants to again, kind of come back and, do some more of spending time here, we can be ready. However, I see that the RSI is also helping us to kind of break out levels. So I see on a daily time frame, I see higher chance of breaking out rather than coming down, because there is a lot of put writing, and also we closed this gap successfully. So if we do not come below this level, which is let's see what is that level. So on a daily time frame, if we not come below this gap, which is around 35,000, so around 1,000 points risk, so we can always be long. So we should be very careful about being short here. However, we can still spend some time here to just get confirmation, to get the inventory cleared here, and then go up. So that is on a daily time frame. Now let's see what will happen today on intraday. So with that in mind, because we had some idea about daily time frame, you see where the base is exactly forming. So do not be long in this zone. So basically in this zone, do not be long as it. Let the market come down. So probably we may have to travel this range, clear inventory, and then go up, or at least we have to come to this level. So this is the zone which is very, very important. So if you want to be positionally long, take only the like 25% or 50% here today. So if there is a closure of this gap, and then if we kind of clear the inventory here, then you can have a better position on the upside. So always in trading, we'll discuss this today after all discussing all stocks. Position sizing is today's concept. It's very, very important. This is a prime example. So suppose if you want to be bullish at zones like this, you should not go all in. You should go 25% or 50%, and also see which day you are entering, because if it is a Friday, there is a fair chance you will get lower prices. So to get them, so these are the levels you have to, and then you have to put your stop losses somewhere here or here as per the system. So and also you see one more thing we have to notice here is that this is on a 15-minute time frame. You see on a 15-minute time frame, let me pull out a channel here, or no, not needed. Channel is not needed. So you see that, kind of sorry about it. Let's yeah, so let's see that on a 15-minute time frame, you see that, how the channel is rising. However, from here, you see, the RSI is falling. So you have to be very careful. You have to be very careful about this kind of divergence here. So on a 15-minute time frame, the energy is not in. So we need to break this out here for any up move. Otherwise, what the market will do is it will come down, pick up the energy, and then go up. So that is how the market works. So this is the auction market theory that you need to understand before going into the day. So for Friday, that is for intraday today, what is the plan? The plan is that today I'm not going to be long as this peak is broken, as long as we break 36,400 or 500 levels. And also there is a decent bit of resistance at 37,200. So we will look at pre-open where we want to open, whether it is this zone or whether it is this zone. So this is going to be zone 1, my preference level. This is going to be zone 2. And if there are any levels here, I will look for longs, and I'll also look for options plays, how they are placing their bets for any reversal or for any range for next week. So probably for next week, I'm looking at a range of this one. So any break of this and or break of this should alert us if you are selling options. So that is for Bank Nifty. If you have any doubts still, you can contact me on Telegram or put in the comment section. We'll discuss in tomorrow's video. Now let's get back to Nifty. In Nifty, let's look at the daily time frame. Let me again just a minute. I'll check whether the video is getting recorded. Otherwise, this energy that we spend on will go waste. Yeah, it is. So here we see that kind of we are filling the gap. So we may spend some time here. So this is going to be the theme for today. So probably this is the zone we are going to spend. So what are these levels? Let's find out so that we can put our intraday trade. So basically, if you look at the market, we are not falling below that gap. So this gap is very, very important. And also there was a selling pressure here last time when we reached this zone. So players will be very, very careful here. So there is another gap here. So these are acting as good supports. So only a break of this level, this particular level where we failed is going to be very, very important. So this particular high 16,795, so 16,800 is a key level that we have to break on the upside. However, what we are doing is, this is a poor structure. We should not create gaps and go. Technically, gaps are supposed to be very strong, but technically these are weak. These are like walls with holes. I call them walls with holes. When I say walls with holes, whenever you are building a wall for a building, if there are holes, the structure is weak. So in case of market as well, the structure is weak. There is no order flow here. So if order flow is not there, always the market will come back and attack those levels. That is why you see the auction market theory coming and going. You can see many examples. Let's not since the concept has come, we will always let's discuss how gaps work. You see most of the gaps, what happens to gaps. For example, you see the gap here. It is always, gaps are always filled. You see this filled. You see kind of any gaps filled, any gaps filled. So the market will always come back for those gaps filled. So gaps again filled. So these gaps, I hate these gaps. So whenever you have these gaps, the market will find opportune time to come back. So if you are positionally, if you want to be long, you want to keep your stop losses somewhere here. That is what we call risk and reward. We will discuss at the end how to basically position size. That's very, very important, whether you are a scalper, a positional trader, or an investor, whoever you are. Risk management and position sizing is paramount. So that is what for Nifty it is. And let's see on intraday how this is going to shape up. Let's see. So let's look at a 15-minute chart. You can use 5-minute chart for execution. However, 15-minute chart should be used for your kind of understanding. So these are the gaps that I am worried about. So basically these look like support. So technically when the market is going up, people look as if these are kind of big gaps that are very supportive. However, when the market comes down, when the market becomes weak, see, basically when you when a civil engineer builds a building with gaps, initially the building will not collapse. However, when the pressure builds on the building, that means whenever there is a tsunami or whenever the number of people living in that building is higher, sorry about it. I usually do not like to talk about negativity, but to explain risk, this is only the way. This is only the way. This is the best metaphor I can get. So you see any kind of structure that has gaps will never be strong. Okay, any kind of structure, you take anything. So basically you can take a building or anything. So basically these gaps are technically strong. That means if you talk in terms of technical analysis, they are strong. However, when you think in terms of market structure, this is strong because now the market is very happy, right? This is because the market is very happy and bullish. These are strong. But tomorrow when the market is weak, then these gaps become very costly for players. So these are the two areas that will be attacked first. So these structures should be remembered. So this is how you should think about gaps. It's not that gap is a support or gap is not a support. It's not like that. A gap is a support as long as the market is strong. But support is if the structure is weak. Okay, if the structure is weak, then kind of the market will be weak. I will give you another metaphor to understand this. For example, there is a boxer. If the boxer is strong, if his health is strong, he cannot be beaten down. Okay, but if his health is weak, if he is emotionally or mentally or physically weak, he can be beaten down easily, right? So that's a better metaphor than talking about building structure. However, since the market is an auction market theory, I always talk about building structures. So if there is a gap in a building, if there is a tsunami, or if the weight on the building increases, these gaps will start cracking. Until then, the building will show up very well, right? Like that. In market also, the market will show up very well until the structure is weak. When the structure becomes weak, that's it. You will start see these gaps cracking and getting filled, right? So you see this on a smaller time frame, you see the gap was created, but the same day the structure became weak, so the gap was filled like this. On here, if you look at the gaps, the structure is strong, that's why it did not get filled. So far the structure is very strong. This is a first indication that the structure is strong, right? That is how it is. Now that is what gaps are about, and today let's discuss about Nifty, how to trade Nifty intraday. So probably I'm looking at zone 1 as this one. This is zone 1, and however I see zone 16900 as a key zone. So probably either today or Monday we will go to 16800. However, we need to see confirm that this structure is not getting weak. So 16500 level is going to be paramount. I told you in my Telegram channel on this day that we should not break 503. If at all we break 503, it is going to be gap filling all the way. Okay, so there can be a decent fall until here because the gaps are not filled. So if you want to be positive, if you want to be kind of bullish on a positional basis or on an intraday basis, this should be your final stop loss. This below this you should not expecting a rebound, because below this, sorry about it, below this, the fall can be pretty brutal. Okay, now that's what we should keep in mind for today and next week. So that's it for Nifty and Bank Nifty futures. Now let's see if we can discuss some stocks. Let's look at Reliance. So in Reliance, as I told you, the structure is very weak. As I told you, this is again the concept of gaps. So there is a gap, sorry about it. There is a gap that is formed. So you see that how yesterday market was strong. However, Reliance was not strong. That's why, kind of half of the gap got filled. And today, if we have to fall all the way to 2440, yesterday I was expecting Reliance to crack until here, but we cut short our trade. However, it did not hit our breakout point, that is 2500 was our stop loss. And above this, it can be positive. So how do you read Reliance? In Reliance, the thing is, if you want to be long, it has to be above 2500 at least. So probably a 40 point positive move you can have above 2500. Otherwise, we may continue to close this gap. So keep that in mind for intraday. We'll check on positional later next week when results come. Okay, now let's see what is happening in Bank Nifty. This is Bank Nifty, and let's see Bajaj Finance. So in Bajaj Finance, what has happened is, let's look at the daily time frame chart. Very calm, as I told you again. So the market is always, market is basically an ecosystem of what I can say, buildings. Basically, if you see, kind of we have come down from the top floor. So we jumped here and came down, tried to go there, did not go, came down, tried to go up, and then go up. Now you see how the gap is getting filled. So today, if the positivity happens, then we can break this gap. If there is negativity, we will shut down this gap. So let's mark the levels of gaps. Gaps are a very good, kind of structures to understand trading. Let's fix these levels so that we can build our intraday mindset here. So basically yesterday, you see that we have, kind of broken into this gap, this particular gap, which is around 100 rupees. So the risk reward is pretty bad. So I do not want to trade here for 100 rupees. However, if you want to be positional, you want to go long above 6306, sorry about it, 6306, with a stop loss of 6222. But I will never trade positional on a gap. So what I will do is, I will let this gap fill, and then when it breaks, I will go long. See how I am creating an ecosystem to control my mind. I do not want to take trades based on emotion. Okay, based on some indicator. Just I follow many indicators. However, you should understand the basic structure of the market before even committing your funds to a trade. So you see how the gap has attracted. So here I want the market to at least spend some time here. If at all it is strong, you want to spend some time, right? There is a honeymoon period. So if I want to go positional, I want the market to spend and fill inventory here, fill liquidity here, and then go above 6306. Okay, so and then I can keep a stop loss here. If I keep a stop loss, suppose if I keep a stop loss here, however, I am entering without this gap getting filled, right? Without this gap getting filled, what I will do, I will kind of enter on a poor structure, which we should not. So let the market come down. Today is Friday. So probably this is my zone 1 we can work with. And any fall below this can take us towards 6120 levels. So we should keep that in mind. So most probably I will be short at 6222 rather than going long somewhere here. So this is a kind of no zone, no trade zone. Above this, you can go long. If there is a small gap up, you can go long. However, keep a stop loss somewhere 6222, but I will do that after the market spends some time here. Okay, so that's all for today, guys. So before leaving, we'll discuss something called position sizing. This is very, very important. You need to follow risk management in your systems. Let's take Bajaj Finance as an example. If you are entering here, you need to see what is the risk I am staring at. Okay, so on a positional basis, what is the risk I am staring at? So you need to commit your funds as per your number one capital. Okay, so you need to understand that capital should be your first measurement tool. If you have less capital, you should not take risky trades. If you have more capital, you should again take trades where the risk reward. So the first filter is capital. Okay, with capital, you should decide whether you want to trade options, cash segment, or futures or whatnot. Okay, so whenever someone says, I want to trade crude, okay, what is your capital? Ask yourself a question. Don't go with a blind mind that I will trade everything and anything based on a system. Understand, your first filter is capital. Now, second filter is risk. What I mean by that is you have a certain amount of capital, let's say X amount. Now you need to understand what is the risk to my capital. Okay, how much I am going to lose and how much I am ready to lose. For example, the risk perception for every person is different. For example, the risk perception of a person in 30s is different from a risk perception of a person in 60s. So you should not draw one line as per so the risk is not the size of a trade. That means the risk is not 100 rupees. The risk is not 200 rupees. Risk is how much you are losing for that 100 rupees. Okay, a person, the price difference is only 100 rupees, but a large player may lose 1 million here, a small player may lose 1k, but this 1k is big for a 20-year-old who is putting only 20 or 30,000 rupees in a trade. So the risk perception is very important. You need to size your risk. You need to see whether you are okay to lose that much. If it is not, then you should not take a trade. And number three, always take smaller positions. The longer you remain in the market, the longer you will survive, the longer you will learn, and the easier it will become. The trading will become for you. The more position size you take, for example, you have, let's say, 10 lakh rupees and you take 1200 lots of bank Nifty because that is what the maximum amount is allowed. That's it, you are done for the day. Okay, risk is important. You need to respect risk. So this position sizing is paramount. If you do not respect position size, that's it. This is the biggest monster of all the three. I have created filters for you, but the biggest monster is not stop loss, but position sizing. What I mean by that is, suppose I have 10 lakh rupees. I want to take a position. I want to take 2,800 contracts of Nifty. I have taken, and then suddenly I see that Nifty has fallen 100 points and I lost 3 lakh or 4 lakh or 5 lakh of my capital. That is 50% of your capital. That's it. Your emotional capital is completely drained. So even if it is a small loss, let me tell you, whenever we make even a small loss, our emotional capital goes for a toss. Our confidence gets beaten down. Okay, that is human nature. We do not like to take a no. Okay, whenever someone says no, whenever your spouse says no to something, you are hurt because it is human mind. It is natural. It is natural for your brain to think so. So you should not feel negativity in trading. That's why you should avoid large losses. I am not saying that you should avoid losses. Okay, the lesser the losses, that is fine, but the larger losses should come down. That is very, very important. It is okay if you are making 3,000 or 4,000 loss every day, but if it is not okay if you are losing 3 lakh or 4 lakh every day, even if you have crores of capital. So losses should be minimal. Keep these things in mind and trade safe. Please like my videos, give feedback in the comment section, subscribe to my channel, and also ask your friends to subscribe this if you are liking these videos. Okay, thanks guys. And again, sorry for the small tech the internet goof up that happened in between. Sorry about it, and have a great Friday trading. Get ready for your weekend as well. Bye bye.